Hello and welcome to another APW quarterly market update. This time we'll be looking back at the year and quarter to the end of December 2025. I'm joined once again by Dr. Steve Garth. Welcome, Steve.
Yeah, thank you, Jeff.
Steve, 2025, Trump 2.0 and generative developments in artificial intelligence. They seem to be very topical issues, and the market was very volatile for a good part of the year. But having said that, in the end, it turned out to be a good year for investors.
That is exactly right, Jeff. And you did sum it up. The year does seem to be dominated by Trump, tariffs and trade wars in the first half of the year. And the second half of the year really has all been about interest rates, inflation and artificial intelligence. Jeff, the chart we've got up here shows the ASX 200, the Australian index, and we're also plotting next to that the US index, the S&P 500. And you can certainly see in early April of last year that big dip, markets down by as much as 20% on the announcement of the tariffs. And of course, they were put on pause only 7 days later, and then the markets very quickly recovered. And in fact, from that point, no one really believed anything that Trump said after that. You can see that markets kept going up and up all the way to October. In fact, they were hitting new highs in October. And then the wobbles hit.
Australia and US tracking pretty closely over that.
Very close. In fact, they've tracked fairly closely for a while, but very strong over that first 9 months of the year. And then you see that separation. Now, that's when the wobble started. The US picked itself up off the carpet, but Australia tended to be a bit of a KO punch there and had a very poor quarter. And you can see the numbers there, Jeff. For the quarter, Australian market down 1%, but a fairly healthy 10.3% for the year.
Yeah, it's a good point, Steve. I think high single-digit, low double-digit numbers are sort of pretty consistent with long-term averages, and they're good returns.
They're good returns. 10.3 is actually a little bit above the long-term average for the Australian stock market. The US market in US dollars seems to have a remarkable return of 18%. Again, it's really the third year in a row. If you're a US investor, you've had these outsized returns. But because the appreciation of the Aussie dollar, you can see that the US returns to an Australian investor, they're a little bit less than the Aussie market. They're about 9.3. Overall, pretty good returns for both Australia and the US.
Yeah, and it's interesting that the US returns have been, as you say, very good, very solid, either in US dollar terms or AUD terms, but perhaps surprisingly, not so good against the rest of the world.
It's very interesting because everyone talks about the US, and I'm guilty of putting it up as the first chart.
Well, it's 2/3 of the developed markets.
It's 2/3 of developed markets, and it does influence very much the rest of the world. But if you look at this chart, Jeff, it shows the other major components of developed markets and the emerging markets. You can see that Europe, who would have thunk? There's been a war going on there forever, is actually the top performing market. All this is in Aussie dollars. By the way, the US number is a little bit different because I'm using a different index.
Sure.
I'm using MSCI indices to be consistent. Europe, pretty good. Japan, pretty good. And the emerging markets are up 24% for the year. And they've been laggards for a while. But you can see that's been really driven by the Chinese market at the end of that chart. Very strong year. But they've also been laggards for a couple of years. So a bit of a rotation going on there in markets.
So yeah, you're quite right there, Steve. China has had a very solid year in 2025. I think it's been pretty broad right across the emerging market sector.
Of course, quite a few of the larger emerging markets, and I'm thinking here of Korea and Taiwan, are also beneficiaries of the technology and artificial intelligence.
All right, well, that's been very helpful to look in a bit more granular detail there. Thanks, Steve. Perhaps we should talk now about bonds, which have been a sort of a similar pattern, you might say.
It's very similar. When you look at the chart here, Jeff, I'm showing the 10-year yields, which are the chief determinant of the way your bond portfolio is going to play out. Now, we mentioned before that the US and Australian stock markets were fairly tightly correlated for most of the year. But in fact, the 10-year yields between the two countries have been correlated for like 5 years or so. But once again, you see the split happening in the last quarter of 2025. And this has all got to do with expectations around interest rates. Now, because, as I mentioned, yields reflect on bond prices, it's no surprise when you look at that chart with the Australian yield bouncing up on some unexpected high inflation data in the last quarter. Yields go up, bond prices go down. So you can see it's quite a poor quarter for the Australian bond index. Okay, yeah, nothing really great. But you can see much better returns in a global bond index, which of course is what we have in the APW portfolios.
Indeed, yeah.
Now, that's because the US rate expectation is continuing on a downward movement. And so consequently, because the US is the largest part of the global bond market, we're getting some really good returns out of global bonds. And they're well positioned. You mentioned that if markets, were to have a bit of a tumble, the bond markets are actually well positioned to cushion any downturn in equity markets.
Yeah, and those 12-month returns to a reasonably sound that we're hoping to obtain from our bond portfolios.
Absolutely.
Well, Steve, thank you for those insights, and thank you to you, the viewer, for taking some time to share that with us. We look forward to joining you very soon on another OPW Market